All right, perfect. Cam is back from jail. Perfect. And we changed name. Nice, nice, nice. All right, let's get started. So, NQ dipped into 4 hour but didn't give an ST, so this move is convincing in my opinion. Exactly what I wanted to take a look at as well, because of course, with the delayed live session here, it's a perfect opportunity to actually look at equities open from the get-go. So I really like that as well. Before we do that though, I want to touch again on the thing that we talked about on Tuesday. And that was the resistance areas that we come into. And what that means for the dollar right here is the first area that we came into that is actually resistance, the transition of that potential order flow seen through those fair value gaps, is this daily fair value gap higher right there into the monthly fair value gap. And simply said, how we view that to refresh your mind again right here. We first go into the weekly. We don't have a weekly fair value gap just yet right there coming into the monthly fair value gap. That's close. We have one right there, but it's not super relevant. We want one that's close, right? So right here, this is still forming. Not relevant currently. Will be relevant next week though. Then on the daily right there, this is actually the first fair value gap that stings into, that is responsible for stinging into the monthly fair value gap right there. So if we want to continue higher, we will likely continue higher off of this daily fair value gap. And if we want to continue lower, then this daily fair value gap should first be overtaken. It's the first area of resistance. So here we might get a rejection like we're currently seeing. Either we continue higher, take out those highs, create a new daily fair value gap. If that happens, then I would argue we might be bullish here. But if we sweep those highs, if we start to respect premium raise, if we do not create a new bullish daily fair value gap right here, then I would argue, all right, that's a great sign that we are looking at a transition of order flow. The only thing we then need is, of course, a daily fair value gap lower afterwards right there. So that is again the 50-50 area right here, where any fair value gap in this area, and I'm talking about this area right here, is just not the highest probability fair value gap. So you can already cater down the area where you want to look at your overall fair value gaps as well. Now, with that being said, let's look at some indices right here with equities open. I have my eyes on ES right here. And the reason being for that is because we are very close to all-time highs. And I was quite surprised that we didn't reach them already yesterday. But yesterday was already a big expansion. And I believe today can be a big expansion as well. And if we want to continue higher, then I would like to see some fair value gaps pushing higher right here. But especially no bearish fair value gaps lower. That's ideal. So here we are not seeing any bearish fair value gaps lower right there. If we can get 15-minute fair value gaps higher and we start to disrespect everything on the left side right there, then we can already look at potential long opportunities if that does present. Although currently price action is a bit disappointing, not too nice in my opinion. Let's look at NASDAQ right here. NASDAQ came into the 4-hour overlap part, beautiful price action actually, looking at the 4-hour right here, can also continue higher. Does want to do that on the lower time frame as well. Then going into the 1 hour, let's see what we have. This is actually what we talked about, same as on the dollar, the first resistance area right there on the 1 hour. First value gap that was responsible for stinging into the 4-hour overlapping part. Then on the 15-minute, we have a 15-minute value gap higher right there. We do have a nice sweep overall of those lows to potentially continue higher. On the 5-minute right here, we have a push higher as well. We are now seeing a nice push higher actually. And on the 1 minute, there's actually, I want to go over a little bit as well on how I approach futures right here. Because on the 1 minute, just before I started the stream right there, I was looking at some longs potentially here, but I wanted to wait for 9:30. And the reason for that is because there is no real resistance anymore. And that's also why we're seeing a huge push higher right there, which is quite nice because there's not a lot of resistance on those highs right there. There's no fair value gaps. There's no real order block stopping it right there. So we'll see fast price action if it does want to move higher as well right there. A very interesting price action. Let me see. Regarding ES, would it not be valid to get a 5-minute fair value gap overlapping with highs to the left instead of 15-minute fair value gap? We already have 5-minute ST before equities open. Oh yeah, for sure. A 5-minute FVG gap right there, overlapping with the highs could also be very nice indeed. Yes, for sure, for sure. I'm looking at the 1 minute, the 5 minute right there. 100%. 100%. Okay, please. All right. All right. Then looking at YM, let's see. YM actually sweeping the highs currently right there. Give me 1 second. Looking at YM right here, currently looking at a sweep actually, which is also quite interesting, but with the whole premise of the other indices moving higher potentially, then this is not super interesting to look at shorts currently for me. So right here, if I were to trade any indices, then my eyes would go to NASDAQ right there, which is already exploding higher. Same for ES right there. So any nice retracement that we might have currently could as well be very interesting. Where on ES, something I would look at, definitely would look at, is we have 1 minute FVG gaps higher right there. So an entry, for example, like this, with covering those lows right there, those lows were made during equities open as well, targeting higher, could be very nice for some scalping action as well. Let's actually see how that wants to play out. And that is the same for NASDAQ right there. Where these lows are vital. If those lows are gone, as in we trade towards them, then I would expect lower prices. But currently, when we are seeing higher prices and we are targeting all these highs right there, then I would want to see these lows protected right there as well. Potentially still coming into the overlapping part right there to continue higher off of that. Let's see. On DAX right here, what are we doing on DAX? DAX continuing higher actually currently, and again, DAX it's quite weak, as in DAX, if it was for DAX alone, it didn't follow any of the indices, then DAX right here would be ready to continue lower. But since it is following ES, NASDAQ, etc., this just isn't ready to continue lower currently. So right here, I would also want to see some higher prices still if it wants to follow the other indices. But this can also lead to consolidation, because if DAX is weak and the other indices are strong, that leads to overall 50-50 price action, which is not something I would want to get involved in. Looking at some of the majors right here, also quite interesting. We're getting a huge rejection right there, continuing lower. And again, the reason being for that is because if the dollar is still unclear, then trading the Forex major pairs right there is a little bit more difficult. And that is the opposite of the indices, where if the dollar is still quite unclear, then the indices will still do whatever they want to do. Where the Forex majors right there are just too reliant on whatever the dollar wants to do right here. So that's also why we're seeing a huge rejection lower. And the same goes for EU and the same goes for GU as well right there, and for any other pair that we have. So here, it is still waiting for the dollar to clear up. And in the meantime, I do not want to look at any of the other Forex majors as well. Still just simply want to wait, give it more time right here. US dollar, Canadian dollar, not the biggest rejection, but still a rejection higher as well. US dollar, CHF, same story, which has been bullish for the most part. US dollar, JPY, continuing higher, actually currently quite strong, convincing move higher. It's quite interesting overall. Looking to potentially target that daily FVG gap as well right there. Have to see what it wants to do. Silver and gold have not really been interesting in my opinion. And looking at this price action alone, it's a very short-term target at 4-hour FVG gap potentially. Other than that, it's a lot of consolidations. Don't really like it. Let's see if we can look to deliver into that 4-hour FVG gap though. Just one huge spike higher. 5 minutes FVG gap sitting right there currently. That could be responsible for delivering into that 4-hour FVG gap right there. Let's keep an eye on that. Let's see if we can read the FVG gaps there. Gold, this is definitely not something that I want to actively look to trade or even look to try to read fair value gaps, because there's not even a close or near target for me right here. It's just very, very confusing price action overall right there. Don't really like it. Bitcoin moving higher, creating a daily FVG gap higher. Most likely we still have 9 hours, so of course nothing confirmed yet, but daily FVG gap higher in the making currently. That could be very nice to look to continue higher towards the weekly context high. As a reminder, we're still in that weekly context overall, to look to continue towards that high. After that, we can mark out these highs right there as a next target. And after that, we're also getting very close to all-time highs. So an all-time high is definitely a very realistic possibility right here because there's nothing really stopping it anymore. This fair value gap already got traded into. So again, also quite important to understand about fair value gaps. And when we talk about resistance, then the first time we trade into a fair value gap right here is when we already traded back into it. So this fair value gap, no matter how deep the sting into it is, there's no 50% in that fair value gap, nothing interesting, it's just the fair value gap alone. So when we then trade back into it, we create a swing high and we then return to the same fair value gap. We are not returning to the fair value gap, although you might hear me sometimes say we are looking to overtake the fair value gap. No. We are looking to overtake the swing high that is sitting right there because that is now the premium rate that we are encountering, not the fair value gap anymore. So that is very important, where whenever we come off a fair value gap, we're always leaving behind another premium or discount rate, which is a swing low or swing high. So if we then take a look at crude oil, let's see. Let me see. This is also, well, I say quite interesting, but not really interesting for me to look to get involved right here. We are having quite a big retracement, which I did not want to see and also did not expect it to happen right there on crude oil. So the delivery towards that daily value was also not the nicest overall. So here I just simply want to wait a little bit longer and want to see if we are still truly bearish or this is all just one rejection of the monthly value gap to then continue higher off of that overall. Here I am not too convinced on lower prices at this moment. Would want to see what we want to do with that daily value gap as well. So I simply said want to wait right here. Want to wait. Then Nifty as well. Simply want to wait. Nothing really interesting. So let me go over some questions right here. And let me also look at some indices right now. Huge retracement right there, actually taking out the low that we talked about. So before I get to the questions right there, actually taking the low that we talked about right there, that I did not want to see go, and we immediately target them. So here, I want to wait again. I'm not too convinced on bullish prices right here, simply because we are taking that low right there, which in my opinion, should have been protected if we wanted to continue lower. If we now again have price action like this, and we disrespect those bearish value gaps again continuing higher, then of course higher prices are more than likely going to happen. Let me see. Hi Ario, I wanted to bring you a reflection on crude oil. Let me see. Is it possible that the monthly opening of a candle can be considered a PD array, especially after the speed that price has fallen after the monthly value gap creating in a month around between January and February, and the other an ST daily. And then now we resume there's a recently created bullish trend. What I mean is the recently created ST, could that speed be a price manipulation and not simple retracement? Could be. And let's actually see, let's dive into this crude oil a little bit deeper right here. Overall, I do not really want to use the monthly opens as a PD array in itself. And the reason being for that is because then we have a lot of PD arrays, because then it's not only the monthly, it's also the weekly, it's also daily, it's also the 4 hour, because everything is fractal. So then we would have to use it on every single time frame, which to me is not something I would want to do, because then it sort of becomes a story where we have a lot of PD arrays. But next to that, let's see on the daily, this daily ST is where we never respected premium raise, right? So we have never respected a premium raise. So this daily ST could be manipulation to actually continue higher overall. The reason being for that is when we actually start respecting premium raise and we now have a new rejection lower, new value gap lower, then we can confidently say on the daily time frame, order flow is actually bearish. Where here, this could very well be a retracement because we never respected a premium rate on the daily time frame. So in that, you are completely correct. And I fully agree with you as well that this could just be a manipulation to continue higher. That's why it's very suspicious to me that we do not continue lower off that daily value gap and that daily value gap. Because if we actually wanted to continue lower, in my opinion, we should have continued lower off that daily value gap and potentially this one, But it's a very deep retracement to make right there to then continue lower off that. Doesn't make a lot of sense to me. So bullish price action here is definitely something we have to consider. We have to take it into account. For sure. I really like your analysis, Valentino. Looks really good. I caught that move on YM. Beautiful, beautiful, beautiful. Oh, that's a beautiful move, actually. Wow, wow, nice one. Nice one, CJ. Nice one. Love to see it. Let me see. NASDAQ right here. Also quite important, of course. Didn't even go over it yet. On daily time frame. Yes, right here. Ideally, we do not want to trade back into that high. And the reason being for that is because when we then have a daily FVG gap perfectly overlapped with that high, above that high, closing above the high as well with the daily FVG gap, that's in an ideal scenario very bullish as well. Let's see what we want to do right here. Coming into that FVG gap right there on NASDAQ though, so even though we had the 1 minute right there marked out, let's see what we want to do. Currently, I don't really see any opportunities, to be honest with you. And I would simply want to wait right here. If we get bullish price action right there and we start creating bullish FVG gaps, that could be quite interesting. Because that to me does indicate that we are indeed more likely bullish. All thanks to you, all thanks to you, my friend. That's all you. I didn't execute that trade. That's what you did. And Q tapped into 50-minute SD. Yes, exactly. So even though the 1 minute got taken out right there, of course, the 50-minute, something we have to take into account. Although the overall formation, and I'm trying not to be too subjective here, but the overall formation we have on this sharp turn is just very blocky. And what I mean by that, it's a very ugly sharp turn. It's just very lethargic. There's no real high probability conditions that I see where price is actually willing to move higher immediately. And that's something that I am missing right here. Let me see. Can you explain the unusual context again? I am still confused about it. For example, 1 hour not create any FVG up higher, but price still going higher on GBP JPY. Yesterday, 5. Yes, let me see. Let's look at GBP JPY. And let's find some other examples of unusual context as well. So right here on GBP JPY, we actually did not create a daily FVG up higher. And although this is unusual context, and what I mean, I'm going to dive into unusual context a little bit deeper, so don't worry. Unusual context right here is when we do not create the daily FVG up higher right there, meaning that we might actually be bearish because we are not creating bullish intention. So then we find usual context to potentially continue lower. Now the dangerous part here is that we are still inside the bigger weekly FVG gap. So to go into unusual context doesn't make too much sense to me. That's also why in the forecast I added it into the breakdown list instead of actually looking actively at that unusual context right there. But if we want to continue higher right here, all right, we do not have a daily FVG gap. So that sort of was a deal breaker for me. I didn't want to look at that anymore. Then on the 4 hour, we still continued higher. So overall, we create new FVG gaps as well, just pushing higher strongly. Here we can say, all right, daily did not create a new daily FVG gap higher. Perfect. 4 hour is following through. So if we have new supporting the ID right there, those 4 hour FVG gaps are perfectly fine to trade off of because the target again is quite clear right there. It's quite clear. And this is also understanding 2 different point of views, because I view this from a filtering process trading plan right there, where a flow trading plan you would, or a combination, even a hybrid model you could call it, where you sort of combine the flow trading plan with the filtering process trading plan, then this is still perfectly fine to trade. But if you were to only look at a filtering process trading plan right here, then the non-creation of the daily FVG gap would be a huge turnoff for me and would not be something I would be interested in anymore. So let's see if we can find some more unusual context as well. Usually they happen on the crosses more often. Let's see if we can find a few. I'm trying to think of one because I think I remember one, but I not too sure where it actually was. Where it, An unusual context is, to sum it up actually, unusual context is very simply said where you expect usual context to form or to be created, or there is already usual context. That does not happen, and when that doesn't happen, that's what creates unusual context. So unusual context is basically the opposite form of usual context. But for example, this right here is also an example of unusual context. Where first we expect usual context right there. We try to follow through, and when we fail to follow through, that is not something usual. So it's something unusual. And then right there on this up candle, that up candle should not happen. Why not? Because we should follow through and continue lower overall with a new expansion phase of a new bearish FVG gap, because that's the usual context, what we usually would want to see. So when it doesn't happen, then the area from this up candle towards that high right there turns into unusual context. So this low right here is now the protected low, and this high right there becomes the target right there. And the mission right there, the objective is now to find usual context on the lower time frame to target that high right there. So why this high? Because that is the first premium array that we then encounter right there. Where the discount array, the boundary that we can go into the lower time frame is not necessarily there. It's more so the unusual context. Where right here, the boundary is again that we are not following through. Right here, if we try to find our usual context right there, and with the usual context, it's just the same. Just a fair value gap higher or block higher, whatever it may be. Just for example, like this usual context right there. Like this usual context right there. To target now those highs because they failed to follow through essentially. This is one example of unusual context. You have multiple examples as well, where this is usual context turning into unusual context more so. Where if we look at a different example, for example, this one right here, is this a good example? Well, yes, we have an expansion phase right there, continuing lower. So very similar to GBP JPY actually. And we should expect potentially a bearish FVG gap to be created. If we ignore this FVG gap right there to the left, the gray box, let's not look at it right there. Then after that, because we are not creating a bearish FVG gap right here on the 4 hour, we can potentially look to target that high right there if the lower time frame is as well supporting the ID. So then it becomes this context where this low is now protected towards that high, which becomes the unprotected high. And that creates the unusual context. So whenever we don't create a FVG gap, we expect a low or we expect the low or the high to be created that is weak. So for example, right here as well, when we do not create this FVG gap higher right there, that creates unusual context when we then do continue lower. And then the target becomes this low right there. That is very, very, very simple said, unusual context. And in that unusual context, we then try to find usual context, if that makes sense. Let me know if that makes a bit more sense. We can go over more examples as well. Let's see. Australian dollar JPY is also a candidate for unusual context currently, right? Which you need another FVG gap or 4 hour rehire to involve. Bearish daily FVG gap not able to push prices down after a few tries, followed by some 4 hour bullish FVG gaps overtaking daily FVG gap and the previous highs within the daily FVG gap. Only thing I dislike is that a new bullish daily FVG gap is almost avoided to be created. Let me see. Australian dollar JPY. It was on my long list right there. This is yeah, exactly. This is a great example of unusual context actually right here, where we try to push higher overall off of this daily FVG gap. We failed to do so, and that is mainly seen by this candle right there. We failed to do so. We do not create a new daily FVG gap higher. Currently, this is the 4 hour I'm looking at. Apologies. But on the 4 hour, it's the same thing. It's all fractal. So right here, it's also unusual context. Where the unusual context then becomes this low becomes the target. Now, when we do take that out as well, like Sefi mentioned here, then we are failing to create a daily FVG gap high as well, which overall indicates that we are respecting some kind of premium array that is sitting right there, which is that swing high currently. So right here, overall, the bullish prices are not that convincing, where the highest probability trade ID currently is the unusual context that we are creating. So the unusual context here is again the 4-hour value gap, not following through, not creating new 4-hour value gaps, respecting essentially the pre-array right there, which is just another confluence. So here, this would not be something I would do in a filtering process trading plan, by the way, but a hybrid model or a flow trading plan is where I would go into the 1 hour right here, into the 50 minutes, finding our usual context to continue lower off of. So we already had that there, but at this moment in time, we might not be too sure, right? That is unusual context, because we can simply still look to follow through. So unusual context here. And if you are looking to get involved, it usually happens just before we hit the target, the last piece of price action right there. So that's exactly where we are currently at, the last piece of price action right there. On the 50 minutes, we also do not have a fair value blower, which is a bit of a shame. 5 minutes, also no fair value blower. Maybe in the next 2 minutes right there, we create the 5 minutes value gap. We'd have to see if the rejection currently is not too big. But if this becomes a 5 minutes value gap, then that essentially would be an entry opportunity, ideally on the 15 minute. And the reason for that is because then you can allow yourself to go into the 1 minute. Because if I enter on the 5 minute right now, then the target here is very close. And that would lead me to have a negative RR trade right there, which is not something I am very interested in. So that's the only thing. So unusual context within usual context, which is unusual context. exactly. Yeah. It's. I can understand that it's very confusing at first as well, because it's unusual and usual and usual and unusual. It's all this stuff. Let me see. Would love to hear what you think of Australian dollar JPY. I'm sure. Oh, okay. Well, I'm short from the 50-minute re after we've been rejected in a daily value gap and a daily sweat high. Yeah. So it's a great trade. Yeah, it's a great trade in my opinion right there. And you look at it from a little bit of a different lens, Trader Green, from what I understand, because you already looked at the re, whilst I saw that as the first opportunity. And by the way, I'm not saying you are doing it wrong or I'm doing it right. No. I think you are doing it great, because we are getting to the same outcome with different thought processes. So that's absolutely perfect. It's absolutely perfect. And yeah, it's a great trade opportunity in my opinion. Where this unusual context right there is definitely a nice target right there overall. And it's also the thing with unusual context. The delivery is less nice than your typical usual context. So take that into account as well when you do go break even and when you do want to look to actively trade it. Let's switch back. Let's quickly switch back to NASDAQ right here. Higher prices. So this is exactly where, for the futures account that I'm currently trading, would be a great opportunity. And again, with the futures account, I'll dive into deeper explanations as well, because I'm trying to minimize drawdown actually on my futures account right there, because I only have a 25K account that I'm currently running right there for the evaluation. So any mini that I take right there, even this right there, would absolutely kill me and would put me into drawdown. And the thing I do not like right here is that we are again sweeping that high. So we're sweeping lows, sweeping highs. I want to see some bullish fair value gaps following through right here. But when we do start to do that, then again, it's the same story. That above these highs, there is nothing really that can push price lower. As in, there is no resistance anymore. And resistance, again, in the form of a premium rate that might push price lower. Only swing highs. Swing highs, yes, we can sweep them, of course, and they are indeed a premium array. But when I say resistance, I'm more so referring to fair value gaps, order blocks, break blocks that might actually have the biggest resistance, where swing highs are very nice to run the liquidity as well. Then on ES, let's see. ES, not as strong as NASDAQ right there. The only thing that worries me a little bit about ES, and this also happened yesterday actually, where if you trade futures, a great indication to see if we actually have volatility in the market, which is just a very, very, it's a very nice rule. I kind of like it, but it's also quite subjective. When those candles are very blocky, can you see the difference between these candles right there and the very smooth candles that we have on NASDAQ, for example? That indicates a lack of volatility because there is no one trading these candles right there. So currently, and this was also the case yesterday, we had an overall lack of volatility in my opinion, because the candles were not that smooth and they were quite blocky. So that is an indicator that we might not have a lot of volatility currently. Let me see. What I learned from you is every fair value gap is guilty. Manipulate gap until it makes another fair value gap. Exactly. I like that. I like that. I like that. Every fair value gap is guilty. I like that one. That's a good one. Let me see. Good morning. Good morning. Good morning. Could you touch on fair value areas and how we can use those? You touched on them in session 2, but I didn't grasp it too much. Thank you. For sure. For sure. So fair value gaps, I'll firstly tell you that, where on YouTube, if you watch the fair value things, I do not necessarily mention that, although I think the link and the correlation is quite obvious. But a fair value area is an order block, a mitigation block, or a break block. Fair value things. Yeah, fair value things. No. A fair value area is an order block, mitigation block, or a break block. A very simple set. So that will already hopefully help it a little bit more. And fair value areas are likely to be respected at the exact spot where the fair value is being offered. And what I mean by that is, let's break the context down on dollar. We were targeting, and again, if we break the context down, we can go for hours right here, but we were targeting the monthly fair value gap right there. So let's keep that in mind. Monthly fair value gap was the target. Perfect. Then when we were targeting the monthly fair value gap, we were creating consolidations right here towards the monthly fair value gap, where we were continuing higher right here. And when we continue higher like this, we overall very subjectively seen, we just have a move higher. We have just been moving higher. So we can assume, and that is seen through daily fair value gaps and through weekly fair value gaps that we might be creating right there. But on the lower time frame, it just seems like an overall structure lag higher, where overall we've been moving higher right here. Just one move higher, we can assume that. After that, we only have one side of the market. Ignore everything that's to the left as well. We have one side of the market right here. And that has been bullish. So only buy side liquidity here has been offered because only buyers got a chance to get involved, essentially. That is why we have retracements in the first place, because when we then get retracements right there, we offer sell side and we offer sellers to get a fair chance to get involved as well. So when we then offer fair value, and this is offering fair value right there, which usually is coming into a daily fair value gap right there, that's a little bit more refined right there. Then once we have offered fair value, price is allowed to move higher. So running liquidity right there. So above this high, for example, we would want to see a run on liquidity because that confirms the overall fair value area as well right there. So let's actually skip price action a little bit. We sweep it. All right, no fair value just yet. So there's nothing really to deal with right there. Then if we continue higher, consolidation, perfect. Now we run the liquidity. We start closing above it. We have fair value gap closures above it. Fair value gap exactly overlapping with highs as well, which is exactly what we want to see, right? So those highs, the overall box that we have right here, let's use the bodies. This is a fair value area, which is also known, the further we zoom out, it becomes an order block. The further we zoom in, it becomes a mitigation block. It's just a fair value area. The fair value area is just a summed up, I'm not sure how you call it in English actually, but it's a gathering name of order blocks, break blocks, mitigation blocks, whatever block you might use. So then right there, this area should now be respected. Why is that? Because all this right here is where we have already offered fair value. So this is where we had buyers get a chance and sellers get a chance to get involved. But we have not offered fully fair value all the way towards the lows right there. We don't need to, because price will move higher when fair value is already offered. So there's no reason to come back all the way lower right there. So until we reach the higher premium rate right there, we will respect those fair value areas to then continue higher off of that. If we do not do that, and the market does one of two things, it offers fair value, like we see right there, like it's been doing, or it's seeking liquidity, which usually also tends to go hand in hand. But right here, in this fair value box, if we do not start to respect that, we start to close inside of it, then the lows right there become the target eventually, creating overall what we also talked about, unusual context. So It's very funny because those fair value gaps, they always give us a reason to actually trade, which of course can also be dangerous, but we have to use it in a proper way. So right here, the fair value area is this, where we are looking to continue higher off of. And that is the area that should be respected. If we want to continue higher, then that area should be respected. Which eventually we sting into a couple of times. I'm not sure if we exactly sting into the box that I have set out right there. But eventually we continue higher off of that fair value area as well. Now, there's then a reason why I expected price right here before we delivered into the monthly value gap to not have a big retracement anymore and to explode higher. And the reason is the exact same thing that we just went over, where currently when we move higher right here, the only area that we did not offer fair value is above the highs right here. So this is where sellers did not get a chance to get involved, not a fair chance to get involved. That's why we're seeing that retracement right there, which sometimes can be a consolidation. Sometimes it's also just a simple retracement to continue higher off of that. This area right here is how far we can actually retrace before we continue higher. So it narrows down our expectation overall. And this area is where we would not want to see bearish fair value gaps being created into that area right there, which in a consolidation, of course, is bound to happen. At the end right there, we do see it happen. But that area should be respected, ideally. So when we then have a retracement right there, we again create fair value. And when we create fair value right there and we continue higher and we again run the highs, we do not sweep the highs, but we run the highs. So we run the liquidity. Then right here at this moment in time, we are very close to the monthly value gap. We had new support in the ID. We had our fair value area. So this whole area, there is no reason to come back to currently because we've already offered fair value. So at that moment in time, we have a very small fair value gap. So the only thing price can do right here is, even though this is a huge fair value gap, the only thing it can do is have a very small retracement right there to then continue higher off of that. And very simply said, if we are wrong about that and we have a big retracement, then we are likely going to target that liquidity right there. So the consolidation here is oftentimes seen by traders as, all right, we come out, and this is how I learned, by the way, so I'm just telling you my experience. The consolidation, when I learned it, was always seen through, all right, we sweep one side and then we continue lower to the other side, where that's not necessarily true. If the high time from context here is just supporting the ideas of higher prices, then consolidations will just act as discount rates. Because if we zoom out enough, then those will become order blocks, those will become mitigation blocks, break blocks. I think you understand the ID. So right here on the 4 hour, that's exactly where we can continue higher from right there, not expecting a big retracement. So we narrow it down, we narrow our accuracy down, if that makes sense. Our accuracy increases overall. So if we now want to continue lower, then you guessed it, this area is what we need to overcome, because that is the fair value area right there. So ideally, we want to see very aggressive price action going into that area right there, so showing no signs of rejection higher. That is in an ideal world. Let me know if that makes a bit more sense. Sounds like a name of a mythical theme TV series. Exactly. The names we use in trading is so funny. I just imagine, I think my parents, when I was in my office at home and I talked about all these different things, my parents were like, what are you talking about? It sounds so crazy. Which I can fully understand. So, all right, when the price consolidates within a fair value gap, it means that the order flow will be in favor of the trend. Yes, essentially yes. And the way I like to look at things, right, is, for example, right here. In this price action right here, we have a daily fair value gap right there, and can be any daily fair value gap, right? Can be any fair value gap in itself, whatever it might be. Right here on the lower time frame, we are consolidating, leading to a thought process that we might actually want to continue lower, right? But we need to understand, when we come into that monthly fair value gap, that monthly fair value gap needs to sort of earn our respect, where the daily right here and the bullish order flow already had our respect. So there was no doubt in my mind that the daily right here was bullish going into that monthly fair value gap. But the monthly fair value gap needs to do a bit more. And with that understanding right here, when we do come into the daily fair value gap and we consolidate on the lower time frame, then it's a huge misconception overall that we can dive into the lower time frame and find unusual context, because it might not seem like we are respecting that, which I would agree with you. Don't get me wrong. I would agree that this does not look like the greatest price action to push higher, but there were zero arguments right there on the daily time frame going into that fair value gap to actually look at bearish price action. Yes, the monthly, but overall bullish order flow was established for a long time. So right here, when we do consolidate like that, the odds are always still that we will just follow through on that fair value gap higher right there, or at least get a rejection instead of just blatantly looking for shorts. So understanding that helps as well when we look at NASDAQ, for example, and we go into the 15-minute and we find some fair value gaps right here, like this, for example, and we consolidate at those fair value gaps, then the odds are still that we actually want to continue higher. Even though we do not create a 1-minute fair value gap higher, we do not have the nicest price action overall, there is no other reason to look at short. So the odds and the probabilities are still that we actually get a rejection at least and that we continue higher. If that makes sense. If that makes sense. Awesome stuff. Yeah, for sure. Thank you. I like it as well. Your parents don't know what they're missing. I try to tell them, but it's abracadabra to them, which is okay. It's all good. I don't. Oh, can you imagine teaching your parents? I would not enjoy that, to be honest. Maybe that's me. Standing in the corner of a room in a party with the beer, thinking these people don't know what fair value is. Yeah. Or I saw the Apple Vision Pro. I saw the Apple Vision meme, right? where someone is at a party and they're standing with the Apple Vision. They don't know I'm watching ICT right now. It's it's very funny. It's very funny. They say you can't teach old dogs new tricks. Yeah, like when you're used to the old ways, it becomes very difficult to try to learn something new. But it's all okay. It's all okay. Currently, by the way, NASDAQ ES, if we take a quick look at it right here, then I am just simply sad not too interested in this. And I just can't really find a clear bias right here, where I would say, all right, I'm overall still bullish. I still expect higher prices, but that is not being supported by the price action I'm seeing right here. So I'm not seeing 1-minute fair value gaps higher. I'm not seeing any fair value gaps higher right there, or any ID that we might actually want to continue higher currently. So I don't really like the price action right here. I would want to wait a little bit more. And overall, the sessions we have done, the live sessions, usually indices, they come to live in the PM session when we do a live session. I think it's a good data gathering point for us. And overall, it's just not looking too nice right here to trade the indices right now. But if we get the price action current support ID, of course, we can still look at it. We can still look at it right here. And mainly how I'm looking at it is from a futures trading plan, where for me it's a little bit different than even the flow trading plan, but because even flow trading plan, I would want to wait for the 50-minute, 1 hour to then dive into the 1 minute, where futures is a whole new world where I can go into the 1 minute right there immediately to tell me my story, if that makes sense. Which if I do want to go over some other examples as well right here. Let me see if I can find it. It was yesterday actually, which was a great example. Let me see. I'm not sure if it was NASDAQ or yes. It was what we were talking about actually with the resistance. It was NASDAQ. Let me remove all the noise. Always triggers me a little bit when I see so much on the chart. We had a 15-minute fair value gap right there. And we also came into the 1 hour right there. Into the 1 hour overlapping highs, I believe. It was these highs right there. 1 hour overlapping fair value gap. And overall, it's quite nice price action to continue higher as well. And we came into the 50-minute and we also came into the 5-minute bearish fair value gaps right there. So again, overall, we understand the 1 hour here is stronger. So it might push price higher overall towards new highs, etc. But these will likely get a rejection. And the reason why that is important for Forex, CFDs, even if you trade futures, if your account is big enough on futures and you can comfortably risk one mini without it being your whole trailing drawdown, then that's perfectly fine. But I'm trading a 25k right there, where this retracement, if I experience that retracement on my account right there, that is my account gone right there with just the lowest amount I can risk. So I want to avoid that as much as possible, which leads me to understand that I need to be aware of these rejections right there. Where in Forex, I did not really care because I don't really need to care right there. It's the least of my concern. Where on futures, it's a complete different story. So on the 1 minute, we need to find the price action with the least resistance, which right here is a few options. Before we come into the 5 minute fair value gap, that of course is already low resistance, where the only thing we are rejecting off of are these lows currently right there. One rejection, continuing higher, a little bit of consolidation. After we get that consolidation and we already get the intention again that we want to continue higher, this is a very easy target. So for example, mini right there to target those higher right there, that could be very nice. Then afterwards, what do we see? We get a rejection right there. We try to push higher overall. We have some weird consolidations right there. Then 15-minute fair value gap gets tapped into. So a rejection lower a little bit. Once we then start to create new 1 minute fair value gaps higher again, start to overtake, like we like to call it, those 15-minute fair value gaps, that's exactly when we can look to get involved. Where here, the low resistance is from there to there, where it's very quick price action if you want to get involved. Where eventually, same thing happens here. We come towards these 1 minute fair value gaps, which again, is not something I would want to trade off of. Did the 50 minutes sting into that? Or those highs? Yes, exactly. Right there. So this is where we can expect the rejection, which we get right there. Once the rejection is done, the new run towards those highs becomes very low resistance. It happens very quick. So if you want to trade futures, then that is quite important to understand. And for Forex, of course, it also helps, but it's less relevant, I would argue, because you just get involved, just ride the wave, if that makes sense. Which currently my futures account is at 2,900 right there. I'm not sure if I'll trade today because currently price action is not looking nice, but there might be an opportunity right here. There might be some kind of opportunity, which currently is, again, it's quite nice right here, continuing higher, but I want a very accurate entry as well. These highs, for example, very low resistance right there. If we create a 1 minute fair value gap, then continue higher off of that right there. Let's see. Let me see. Would you look at fair value areas to the left of your chart? It really depends. And this is also where I only look at the most recent 3 swings for fair value areas, because I've also been there, and from my experience, of course, then it gets very confusing if we don't have that rule, because then everything is already fair value in the market. So it is, and again, fair value areas are a little bit more subjective, but for example, this right here, the reason why we are respecting that is because this is the fair value area right there. And let's see, on the daily time frame, I would not look at it to the left. So I would not look at these lows, for example, as fair value areas, only when we are actually looking at it in the most recent price action. So here, when we retrace, then that would be fair value area. But currently, not anymore. Let's actually see NASDAQ right here really quick before I dive into the other questions as well. So the price action here, 4 minutes until we create a 5 minute fair value gap. It's quite a while right there for the 5 minute. Let's see what it wants to do. Let's keep an eye on this. Wait to see if 1 hour makes a value gap. Exactly. Here on NASDAQ, yeah, that's quite nice actually. I like that. Gives us a lot of context to trade with as well. Potentially trading towards it, trading off of it. These highs are definitely going, as in, I'm quite confident that the highs right there are going sooner or later. The only thing is of course, that's the more difficult part in trading, is actually trying to capitalize on it here, where the price action overall, the delivery here is just hasn't been that nice. But if we create a 5 minute fair value gap right there, then we have a very nice short-term trade opportunity right there. So let's keep an eye on that. That is in 25. Okay. Let's see. For example, crude oil 4 hour. Here to the left. Yeah, this is not so. Yeah, exactly. These are where we can potentially, if you are trading flow trading plan, you can expect a rejection. So you can narrow down and refine the area a little bit where we might get a rejection. Where for a filtering process trading plan is again, it's almost like two total different approach to trading. Where filtering process trading plan, you don't need to mark out that for our order block right there. The reason for that is because you are already waiting for a 50-minute ST plus re. So if we sting into that, before that time, we do not even get the ST, we do not even get the re. So if we get the ST plus re, it's going to happen right here. So there's no added benefit to marking that out. But flow trading plan, that allows you to filter or narrow down again the area we might continue lower from, allowing you to go into lower time frames even sooner, if that makes sense. But overall, that is not something I would count then as a fair value area currently. Let me see. Wondering what you think of cable. Dipped into 1 hour fair gap, now moving lower. Let me see. One hour fair value gap right there. Continuing lower from that. It's currently looking quite nice actually. The only thing is that the volatility might die down really quick right here on cable. And because it's quite late during the day. But overall, this is quite nice price action. Quite nice. Only thing that would withhold me from trading this, and the argument I could see against this, is that we are not sure what the dollar wants to do. And the dollar is in 50-50 price action right here. So overall, every fair value gap that we have right there is quite 50-50 right here currently. But other than that, it is looking quite nice right there, for sure. That is quite interesting. Thoughts on GU today? Dollar just being an ass, or could that dump have been avoided? 4 hour fair value gap sting, sweep that low. Could it have been avoided? Yes, it could have been avoided. And well, the reason why it could have been avoided is simply because the dollar just hasn't been that clear. So if we talk about stages of probability, the highest probability price action does not happen in the beginning right there. It happens only when we have the clear, confident signs that we actually want to continue lower. So could it have been avoided? For sure, for sure. If we wait a little bit longer, have a little bit more patience. Is it a bad trade? Well, for that reason, we could argue it is not the best trade. Let's put it that way. And right here, we tried to push higher. Actually, on the Wednesday, we failed to do so. And when we continue lower right there, it's also not the ideal price action I would want to see, because we are also failing to create a daily fair value gap higher after that right there. So it's not ideal. It's overall just not ideal. Let me see. Can you please talk about the time factor just before taking a trade? Example, looking at the kill zone and also about the Forex news. Also in Forex Factory, they say that the news is expected good for the currency, but the price can show random effect with the news. Yeah, so to go over the last statement first, news being good or bad is not a direct correlation with what short-term price action will do. So I've also seen a lot of Twitter threads, and well, that was actually years ago when I looked at that, where people were trying to trade NFP and CPI based on what the numbers were. So if they were higher than the last time, then it would do this. If it was lower than the last time, then they would this. And yes, might work 80% of the time, but for NFP, CPI, you want to be correct 100% of the time. Otherwise, it might just cost you, and it's not net positive for your revenue. But it's not a direct correlation. As in, if we have bad news and we expect the dollar to be affected by that, etc., because the dollar might continue lower, then the dollar might first just continue higher and might, as we know, a fake move to then continue lower off of that. So the direct impact of news is not correlated, where news traders perform really well because they know the long term that the currency might do. They have no clue what's going on the 5-minute and 50-minute. They might look at the monthly and say, all right, news is bad, so for the next coming months, we might actually continue lower or continue higher a little bit. So that's the same way I approach news. So seeing that is good or bad on Forex Factory, there's not a direct correlation of whatever it wants, of what it wants to do. That's where price action comes in, and price action will tell you what it actually wants to do, if that makes sense. Then the rest for news, It really depends, because for flow trading plan, if you're looking at 1 minute, 5 minute entries, especially 1 minute entries, kill zones are important. As in, kill zones, you can't neglect them. But if you are looking at 15-minute entries and above, so 5 minutes, 15 minutes, 1 hour is where you don't necessarily need kill zones anymore, and you just need that specific time during the day, which is for London majors between 2 a.m. and 10 a.m. You can execute that if you have news supporting that ID. Then for Asia majors, you can just throughout the whole day, you can execute if you have, again, news supporting the ID. And that is the most important thing as well for filtering process trading plan. And for the 5 minute, 15 minute, 1 hour, 4 hour, etc., is where we need news supporting the ID to take that trade, because otherwise it might be very clean, or it might show that it's very clean, the price action, but the time is not supporting the ID. So before I take a trade, I already know exactly if I can trade it, because otherwise I would not even be looking at the chart, if that makes sense. I would not look at NASDAQ or ES currently, or even GU or anything like that, if price was, or if time was not supporting the ID right there. So that is very important to understand as well. And other than that, I would refer to the time videos in the advanced enrollment. So not the foundation enrollment, the advanced enrollment, which is where we go over higher time frame time and lower time frame time, which is where we have the exact details on which time I'm looking at. Why did you decide to start a futures eval? So it's been a long time coming, and I've sort of been procrastinating trading futures because I get quite a lot of futures questions as well, and I never could answer them, and I always had to revert to Zach or whoever it may be that has been here for a long time, that has been trading futures for a long time. And that bothered me a little bit, of course, because if I want to help, then I also want to help, as in I need just experience and I need to have knowledge on futures, which I just didn't really have, because I did trade ES, NASDAQ, and YM, like you see it here on TradingView, but I always trade them through a CFD. So through a prop firm, through IC Markets, whatever it may be. And that is great, but it did show me currently as well how much better actually executing on the exact futures is. And why I bought it and why I didn't do any study before it is, I don't know. For me, it's like I learn the best when I just dive into it. And otherwise, I might always procrastinate the start, which for me is not going to help. So I just dive into it. And in the past week, I learned more than just from trying to learn from a video or something else like that. So that's the reason why I just bought it. And it's also very interesting because, I don't know, it's quite exciting to look at something different once in a while, where Forex and other things, filtering process trading plan, of course, it makes you money, but it can get quite boring. And I think that's also very important, where if something is more exciting, it brings some life to you, then it's a lot better than all the money it brings. That's the same with stocks, actually, and also the reason why I was looking at stocks, because stocks were always very nice to me. I always really enjoyed looking at stocks. It's also the reason why I'm looking at it again right here. Which Shopify, by the way, is doing great. Let's see if we can hit that first target right there. Could be very nice. So that's the main reason why I trade futures, and as well to expand my trading knowledge overall, which I think is important. Let me see. Would you wait for a 4-hour re or already look for trades off the daily FVG gap coming from monthly FVG gap in New Zealand dollar, US dollar? Let me see. Let me see. All right, we have this monthly FVG gap right there on New Zealand dollar, US dollar. Let me delete everything right here. Monthly FVG gap, perfect. Weekly, do we have anything coming off the weekly FVG gap? Right there, pushing into it. It's quite 50-50 already. Not the nicest, because we are respecting both currently. Daily right here, we have this daily FVG gap right there, which is definitely quite nice to look for longs potentially right there after sweeping those lows as well. We could definitely see longs right here. And your thought process is absolutely perfect, because right here, I would want to wait for a little bit more confirmation than just a daily FVG gap. I would want to see another 4-hour FVG gap higher right there, just because I am not too certain on if it actually wants to push higher. We've been consolidating. We have not pushed lower significantly, as in not Not convincingly. As in, yes, we've pushed lower, but the price action leading up to that has been consolidating. There's not been nice price action. So here, a 4-hour FVG gap right there higher can do no harm, can only prevent us from potentially taking an unnecessary loss. So here, I would definitely want to wait for a 4-hour FVG gap right there to get the right confirmation again. For sure, for sure. Zeus already knows me too good. I'm calling it right now. Not something I would like to get involved in. Yeah, on the daily and going into the 50-minute, it's too big of a jump for me. As in, that's too the price action is too low probability for me to make that jump. But 4-hour right there to have a little bit more confirmation, that's perfectly fine. That could be very nice actually. Let me see. Ended up not being able to take it because my PF eval is frozen right now. What is PF? PF, which one is that? A prop firm. Oh, yeah, okay. I thought it was some name of a prop firm. Yeah, no, I thought it was, like, I don't know. Yeah, Funded Engineer is going through some weird stuff right now. Apparently they did some sketchy things, which is crazy to me, to be honest. And I'm never trying to get actively involved in any of the drama, but I really trust the Funded Engineer, to be honest. I did not see that coming. But again, there's always two sides to the story, so who knows what is actually happening. Not one to judge. Let me see. If you have time over, I have all the time in the world currently. Well, that's not true, but I have time over right now. I would love to hear your insights on Canadian dollar JPY, Tuesday PA, where you had the news, Canadian dollar orange folder, and a 1-hour FVG gap. Would it be a good idea to take a 5-minute entry off of that 1-hour FVG gap there? It is an ugly ST, or now not ST at all maybe, but I was not sure. I took a loss there, but now looking at it in hindsight, it was not a high probability trade. You know, when all the explanations always in, as in the explanation from the 1-hour FVG gap to the 5-minute, it gets me super confused when I look at it on text. So I'll just tell you my thought process right here on Canadian dollar JPY, and then I'll see if it matches up with the question as well. Just reading the question always gets me a bit confused, to be honest. I have to see the actual chart to be able to understand it. Let me see right here. Daily FVG gap right there. Is that the one you were talking about? Tuesday? Yes, that's the one. Perfect. First step. All right. Then going into the 1-hour right here. 1-hour ST. Ooh. This price action is currently very ugly, but imagine you're talking about this 1-hour ST right there, which is not too bad, to be honest. Let me see the lead up actually towards that. We were respecting those premium rates. So the rejection can be a little bit bigger than usual, where it's not just your typical sting into it, it's a bigger retracement right there. And the reason I say that is because there's some bearish momentum in the market. And whenever we have bearish momentum in the market and bullish momentum, of course, we can still look to continue higher, but the rejection, the retracement right there is going to be bigger. Where if there's only bullish momentum or only bearish momentum, and that's exactly when we can expect only a sting into it to then continue higher. So let me see if I can find an example where we only have a sting into FVG gap to then continue higher right there. Well, for example here, this had no bullish momentum at all at that moment in time. So those lows right there, which eventually ends up creating unusual context, that's exactly when we can only expect a sting into it. So right here, taking that into account, of course, when we just have the 1-hour ST, it's perfectly fine to go into the 5-minute. It's just something to take into account right here. We have this 1-hour FVG gap and 1-hour FVG gap above it right there. Overall, both got tapped into. Probably didn't have the nice price action on the 5-minute. But if they did create a 5-minute ST, let's see, when did we tag it? Well, actually there, right there, is quite interesting right there. It's not necessarily, it is Asia major as well, so it's perfectly fine to execute in my opinion right there. That is actually quite a nice entry overall. Let's see, that is Monday, then Tuesday right here. We get a couple of confirmations, but after the first one fails, that's already suspicious to me, and I would not necessarily look to get involved again, if that makes sense. So let me see if this lines up with your question as well. Get orange for would it be a good idea to take 5 minutes of the? Yeah, I think this is I believe that this is not necessarily a bad entry. I think that's a good entry for sure. I think that's a good entry and it's a good loss in my opinion, for sure. I think there are things leading, as in the lower time frame is likely always going to have some high probability price action, right? It's likely always going to be clean, somewhat clean. The higher time frame needs to be clean though, especially if we want to take a filtering process trading plan trade, then the higher time frame just needs to be very accurate. That's the most important. That's the most important thing. I posted about shop in stock channel. All right, I would have to see that actually. I have to see. I have to look at that. It's interesting. Interesting. NQ no 1 hour for FVG gap. Oy. Let me see. All right, that's good to know. That's good to know right there. And this is, by the way, exactly what I meant right there with that last resistance area right there. That last candle right there reaches for that high. It's a great no resistance area. So again, for Forex, yes, that's most likely not a good trade idea right there. But for futures, definitely, I quite like that. That's a very high probability scalp. And the same goes for when we are close to the lows right there. The FVG gap, last FVG gap right there, there's no real other thing that it can do than just continuing lower right there. Of course, be careful with your risk management because you also need to have your limit, right? Where if it reaches eventually this order block right there, I'm not interested in it anymore. Only very small retracement to then reach those lows aggressively. Same for the highs right there. Let's see. What are we doing? Price too low probability based off the dollar movement, right? Or is it something else? Probably. All right. Yeah. It's mainly the dollar. Mainly the dollar right there for GU. Right there. That was just not the highest probability. Not the highest probability. And yeah, it's two perspectives because flow trading plan, I can understand the trade IDs on GU and all the other pairs. Filtering process trading plan, you're almost reliable on a trend. And if the main asset right here, which is a dollar, which basically moves the market, is not ready for a trend, then we can't really expect a trend as well on the rest of the pairs. Let's see. Would you look for higher prices on the dollar if we get another daily FVG gap, or would you want a daily FVG gap to close above the monthly FVG gap, or does that not matter? Well, if we get a daily FVG gap higher right here, we get a close above this high right there, above that high. And with a close, I mean that we are not respecting that high. So we are not respecting a premium rate to then have an aggressive move lower. No, we are having a daily FVG gap higher, aggressive move higher, easy close above right there. Ideally, fair value gap exactly overlapping with those highs as well. Then I would expect higher price actually, or at least a little bit higher right there, where overall the monthly fair value gap is quite big. It's a large fair value gap. It's a large area where we might continue lower from. So the only actual reason, or the only actual confirmation we can have where we can confidently say price does not want to continue lower is when we create daily confirmation right there, an ST lower, and we fail to continue lower off that ST. For example, like we might see on crude oil right here. We had the ST and we failed to continue lower. So when we now reach back above those highs right there, or even get close to it, then we can confidently say this monthly value gap will not hold. If that makes sense. But to answer your question right here, depends on how we close above that high right there. Any news coming out about Fun and Friends? Yes. Currently, nothing really interesting, nothing really that probably excites you, but it's a lot of behind the scenes things that we're setting everything up in order to have a good launch, where we don't want things happening like Fun and Engineer, of course. We can never see the future, but try to avoid it as much as possible. No weird shenanigans before we actually launch. It's very important. We don't want to rush it. So news, not necessarily news that is super exciting or relevant to you potentially. Expect a launch probably maybe May, something around that time. Spring, somewhere out there, maybe summer even. Quick in and out, exited before the chop. That's nice, and I like that. Hope, and I think that's very important as well to understand right there. That when you do take a trade right there on Nasdaq, for example, I like the idea and even a filtering process trading plan right here. When you do take a trade, a very quick in and out trade. That's always good. When you're not sure about the conditions, about high probability, low probability, just very quick trades. That's very important as well. Nice one, Hope. Nice one. I like it. Good job. Let me see. Thank you. No worries. No worries. My pleasure. If in the current time frame there are no gaps in our way to the target, we consider it a low resistance liquidity run area. But do we have to take into account gaps in lower time frames? That's a great question. And let's say on the 1 minute, for example, right here, we have, and again, this is fractal, so I'm using the 1 minute as example, but you can think this, or you can imagine this to be a 50-minute gap, for example. And when we have no resistance anymore, that was a very Dutch way of saying anymore. When we have no resistance anymore to the left side right there, as in we have no 1 minute gaps right there, could very well be 50 minutes gaps, etc. It's all fractal. Then, yes, on the second time frame, which I do not have access to right there, there will be a gap, but that gap right there is on the lower time frame, meaning that leads me back to the story. All right, which gaps are the stronger ones? And those are the ones that happen on the higher time frame. So on the 1 minute, if you want to have 1 minute resistance, it would be in the form of 1 minute gaps, 1 minute order blocks, etc. Where the second time frame right there is not resistance right here, because it's on the lower time frame, if that makes sense. So if this was the 50-minute right here, I think that makes more sense. If this was the 50-minute right there, they wanted to push price lower, and we have no resistance, then we might have a 5-minute or a 1 minute sitting right there. But since they are below the 50-minute, then it's not necessarily resistance anymore. It's just very low probability that will actually give a significant rejection to continue higher, if that makes sense. So we do not really, or I do not really consider those lower time frame resistance, if that makes sense. Let's actually see right here. This is not great conditions overall if you are looking for a trending trade. And what I mean by that is looking at price to continue lower or higher significantly. But it might be interesting to do some scalping. Currently we had a nice sweep, beautiful sharp turn. Wow, actually a textbook sharp turn right there. Textbook sharp turn right there. Continuing higher, coming into the breaker right now to potentially continue higher as well. Running into this resistance. So right now, the only thing this candle, the next candle can do is indeed that, is lower prices. Because we are already respecting this 1 minute gap right there. Where the only thing it can do if we do not have a down candle right there and this becomes an up candle is reach for this high, but then afterwards reach for this high, which after we have no resistance anymore, so then reach for that high right there. So then it becomes a dominoes effect where we reach for that high, then we reach for that high, then we reach for that high. I mean, this 1 minute scalp long, nice one. Nice one. Yeah, this is a very high probability or high probability. It's a good trade right there, in my opinion, to look for that target right there and then look for that target right there. This target is a little bit further, so keep that in mind as well. That this target, it's already nice to take some risk off the table. If you are a futures trader, if you are whatever it may be. Target is 17,866. Let me see, 866. Yeah, that's nice. That's nice. Nice one. Nice one. I like that. All right. Let's look at some ES in the meantime as well. See what it's doing. ES, to my surprise, is a lot weaker. Although we have a nice respect of the 15-minute fair value gap higher right there. Overall, just not the nicest price action. If we can establish some bullish price action right here, then we do have very nice price action. And the only resistance we really have is that 1 minute fair value gap right there. Because we are not creating any fair value gaps lower, which is a great sign. So after that 1 minute fair value gap might be traded back into, and we get the rejection. It's the same story as what we just saw on NASDAQ right there. Rejection, might mess around a little bit, fair value gap higher or even a push higher. It's a very nice last trade towards those highs right there. That could be very interesting. Let's actually keep a look on that, look at that, and NASDAQ as well. First target reached right there. Next target, for me, but that is me. That's my personal preference. So don't let me affect your trade. I always like to take a little bit off before we actually reach the highs. I'm traumatized by the fact that it might just not reach that. It happened to me too often. But again, that's very subjective as well, so I understand that. Let me see on ES right here. Currently the rejection happening, so it's normal price action. Currently right there, what we would want to see is, and again, I'm talking about bearish price action because if we do not get that bearish price action, then what are we going to do? Then we're likely bullish. So right here, if we want to continue lower, then this next candle, ideally being a down candle, ideally as fast as possible, creating bearish fair value gaps right there, continuing lower. And if we do not do that and we start to take out those highs, which it might seem like we are currently doing, that's great, because then we can potentially look at longs as well. And this is essentially everything, right? Because this is also what happens on the dollar currently, actually, on the daily time frame right there. Happening on every single time frame right there. It's also what we're seeing on the daily right here. But currently, for bullish price action, perfect. It's exactly what we would want to see for bullish price action if we expect higher prices. For bearish price action, it should now do something weird on the bullish end, where we fail to create a daily VWAP gap right there. We fail to push higher. Perfect. Then we get the bearish price action. Let's see, ES and NASDAQ. There it is. Next target right there. And for futures, again, this was a good opportunity. It was a good opportunity for futures, for Forex, and for your typical trading plan. It could have been definitely a lot more difficult, because this is where futures just have the advantage over just your normal Forex CFDs. ES right there. Very nice price action to potentially continue higher right there. Ideally, a confident close above this swing high right there, just to confirm again the idea that we might continue higher. After that, the runs on liquidity become very easy, where we have those highs if it wants to push higher as well. I want to break even because only in a one lot, treat the partial taken spot as a break even. Yeah, 100%. I like that. I like that. Hyro, how much do you trade with a 25k count? I use 250 per trade on ES 5.SL. Yeah, for futures, it's a little bit different, as in I also aim for around that 250 per trade, where it's a really different world for when I'm because I'm still in the Forex mindset, right? So when I think of that question, I'm like, all right, I have my set amount of percentage that I want to risk, where futures is almost like you dive in and it's a little bit different. So I'm a complete beginner to futures. It's very funny. But I'm also aiming for that 250 per trade on ES. 250 per trade on ES, where ES, of course, is a little bit more easily tradable, especially on 25k account for futures, because not every valuation, every tick move is where it will take you out. Of course, it's all relatively seen, but it's easier, for example, right now to take a trade right here to cover this low right there on ES to target higher, where on NASDAQ, that would be a little bit difficult, because when we then reach those lows, you are basically messed up. 250 per trade, yes, I like that. I like that. Let me see. Nice close above the highs, by the way. Beautiful close. Beautiful close. And again, the question about the fair value area all comes back, because this is now overall the fair value area that we had. This is the retracement. So we should respect that to then continue higher off that. Beautiful. Today on Australian dollar JPY, would you look for longs as a filtering pulse trader towards a swing high inside the daily value that failed to displace higher and respect the discount rates? There was no entry on the 4 hour, only the 1 hour. I guess this would only be for the flow traders to trade towards the draw on liquidity. Let me see. Australian dollar JPY. This is, by the way, beautiful price action right here, continuing higher. I really like this. ES as well. For me, this is definitely an opportunity to look to continue higher. Right there. That is definitely looking quite nice. Where's NASDAQ in terms of the actual high? Okay, it reached the high. It reached the high right there. Good to know. So be careful above that high trying to long. ES has not reached any targets yet. So even though it's weaker, I would prefer ES right there to potentially look to continue higher. But it is weaker, so keep that in mind as well. Nice one, though, boy. Nice one. Nice one. Perfect. Beautiful trade opportunity, actually, right there. Beautiful trade opportunity. This is exactly how I have been approaching as well futures with this account right here. and just the highest probability price action right there with that whole thought process. It's paying attention to those small details. That's very important right there. Very important. Let me see. Australian dollar JPY. Australian dollar JPY. What was the question again? Towards the swing high inside the daily VWAP. Filter display is lower. Respected discount raise. There was no entry on the 4 hour. Only on the 1 hour. Where's that daily? Shanghai inside the daily VWAP. Which daily VWAP? Is it this daily VWAP right there? Right there, that one. Filter display is low. Ah, yeah, the filter display is lower and expected discount raise. There was no entry. For me, it's always I always get so confused when I just read it on text. And respect discount raise. There was no entry on 4 hour, only on 1 hour. I guess it would just yeah, more than likely, exactly. So here, for example, on the 4 hour, this is of course initially it's a good opportunity, but we are respecting premium raise right there as well. And then you would need to dive into the 1 hour sort of right there to even capitalize on the unusual context or to continue higher right there. So then it becomes more of a flow trading plan. Exactly. If that makes sense. You said it perfectly already. Yeah, for sure. And depends, Lutfisk. If you want to focus on a hybrid model, which I can definitely understand, but limit your overall pairs right there, then this is definitely a great trade opportunity. Let's see. Perfect example, exactly. Your teaching is the best by far. My trading has rocketed since joining. Knowledge, risk management, confidence to hold, patience, everything has leveled up for sure. Appreciate you a ton. Thank you, man. Thank you. And again, that's all thanks to you. That's all thanks to you. That's all credits to you, my man. That's all you. That is all you. I'm not the one pushing the buttons. I'm not the one taking notes. I'm not the one listening to the knowledge. So that's all you. That's all you. I would like to thank you very much. Where's this coming from? How did this live session all of a sudden turn out? I would like to thank you very much. I reached 26,650 on 2 Apex account. Perfect. That's profit. That's profit target, right? I was a loser the last 2 years. No, my friend. You were learning, not a loser. Come on. 2 months with you and I expect a 2,000 payout at the end of this month. Thank you. That is insane, my friend. That is insane. Yeah, that's crazy. I'm getting a bit shy. Don't spoil me, please. Same past 2 challenge accounts since starting the membership last week. I can't unsee fair value now a lot. Thank you. All right, that is crazy. It's crazy. But that's the exact goal, right? It's the exact goal. It's the exact goal, and I'm very happy to see it come to fruition. The goal. It's very happy, very happy. The goal always for the MMT has been the main vision, of course, trying to make money, but becoming the best and most reliable trading and educational company there is. So currently we're doing quite well. In what hybrid model consists? Yeah, hybrid model is, for example, a hybrid model is when you start off as a filtering process. But if we look at Australian dollar JPY, for example, that is exactly when you would go into the 1 hour right there, which I would not necessarily do in a filtering process trading plan instead, unless it's a very rare occasion. But I would go into the 1 hour right there to then get a better detail. Where filtering process, complete filtering process, I would just ignore this and say, all right, I don't want to trade this anymore. But flow and the hybrid model right there, where it's a combination, is where you could go into the 1 hour to get a better detail, 50 minutes to get a better detail, to get a better understanding of what we actually want to do right there, where you can still take a trade towards any side, where the 1 hour, 50 minutes is sort of guiding you towards either side. Where filtering process right here, you would likely only take trades towards one side. You wouldn't all of a sudden switch. You would then switch to another pair instead of all of a sudden switching on the same pair. Flow trading plan, you're constantly switching on the same pair. This does, and it is quite important, that limit your overall pairs throughout the week. So you don't necessarily need to limit your pairs overall, as in you don't need to have strict pairs. You're only looking at AU, EU, and GU. No, you can look at the best filtering process opportunities right there. Stick to maybe 4 for that week. And then in those 4, if they do not play out or they do the opposite of what you expected them to do, then you can still capitalize on them as well through a flow trading plan approach. If that makes sense. That is the hybrid model. and how I would go about that as well. Which is, by the way, something we did not go over yet. It's something in the spring enrollment. I just remind myself that it's not necessarily something we went into to depth into depth. Well, but it's something we're going to go over in the spring enrollment actually. Let's see, what are Nasdaq and ES doing? Nasdaq continuing higher and did not retrace into the fair value area right there. But again, the more we continue higher and the more difficult it becomes. And the reason for that is because now we are creating 5-minute fair value gaps. Now we are creating 15-minute fair value gaps. So that's all things we need to have and we need to take into account eventually when we are continuing higher. So that's why as well a flow trading plan is ideally when you focus on one pair, because even me, when I start trading futures this week again, it was quite, or I needed to get used to it again, where it was, I was constantly switching between time frames, which filtering process is a lot different. You need to take into account almost every single detail that we have sitting right there. And on ES right here, continuing higher as well. ES just very weak, very weak. Are we creating, we have a 5-minute fair value gap sitting right there. 15 minutes, nothing just yet. Very weak, although this is definitely nice to look to trade towards those highs, but it is quite weak. Price isn't pretty, but even on the ES, the 15-minute flood held up nicely, and then when price stung into that fair value bounced nicely. Yeah, exactly. It's not the nicest price action, but it does the job. Let's put it that way. It does the job. The only thing here is the risk management becomes a little bit more difficult. Right there. All right. Let's see if we have a few more. Nasdaq, for me, if you caught that trade right there, then I would call it a day right there. I would call it a day. Walk away with profit. Perfect. Then we just sit out. This is, I'm very happy this happened actually, because this is one of those examples. I can mention it enough in trade recaps. I can mention it enough in breakdowns, but you never truly get to know what it looks like until you see it in live real time right there. So I'm very happy that played out as well. I'm very happy about that. And the same goes for ES right here. Same goes for ES. Just do your job price. Exactly. All right, if you have any questions left right here, feel free to ask them. Slowly going to end it right here as well. Essentially ES pushing price higher right there towards the highs. With these highs are definitely target overall right there. After we can continue higher. Potentially, I'm not sure if it's going to happen today. But if we get a nice move right here towards the all-time highs, then definitely still looking to get involved right there, which could be very nice. But currently it's a bit slow. Are my favorite lesson from you since I joined the membership is demand more from price. Yeah, it's very important. It's very important. It's probably for filtering process trading plan, even flow trading plan, but in its own way. Filtering process trading plan is the most crucial part about anything. Where usually, and again, I don't want to blame every loss on that, but usually a loss can be blamed on you're not demanding enough from price and you're getting too simple-minded a lot of times. And that's from my experience, right? When I take losses, it's usually I get too simple about it, and I think every ST is now starting to hold, etc., and I'm ignoring all the red flags, sort of. And that's very important. My favorite lesson is understanding that less is more. Yes, also very important. Very important. I like that. I like that. And demanding more from price as well is because the higher time frame, the lower time frame, there's going to be a setup every day. And this all leads me back. It's a funny story. I think I mentioned it in one of the enrollments. I'll end the live with this. So if you don't want to listen to my rant, then I can completely understand. But the way I started trading and the way I started learning this, I just simply went into the 1 minute time frame on every NASDAQ ES day right there. And I was looking, all right, where did fair value gaps hold? So for example, I saw on NASDAQ, I saw that we pushed higher right there. I would have seen that on the 1 minute right there. And I would have thought, all right, we are pushing higher. Why are we pushing higher right there? And then, of course, there needs to be a differentiator. And the differentiator eventually became, all right, the higher time frame needs to do exactly this and this and this and this. So that's very important to understand, where I sort of reversed engineered my whole trading plan. I did not start on the higher time frame. No. I was also like that, where I just went into the 1 minute time frame and I just looked at the 1 minute time frame and tried to catch every move, because that's where the fast price action happens, right? If I'm a day trader, I need to be on 1 minute time frame, which is the opposite of true. Yes, you can be on the 1 minute time frame, but you first need to understand what happens above you. And eventually, seeing all those things right there happening, 1 minute for variables holding, studying it for enough, eventually led me to understanding, okay, I need to go to the higher time frame right there to understand what it actually wants to do, which is extremely crucial to understand. 100%. Bring it on, brother. Time for rant. As long as it's a useful rant, then I can do it. What am I hearing? Let me check on my dog really quick. 1 second. All right. Aryo, do you compound your profits in future trades? Depends on how you look at it. As in, I do like to increase my risk after a certain boundary has been hit. So, for example, for typical Forex, for future, I'm not sure, but for Forex, what I do is, if, for example, I have a live account, or it's a private account, or it's an investor account, where I do not necessarily have every month a profit split from a prop firm or whatever it may be, then I do like to compound that. As in, after 8% profit, something like that, where you have enough buffer to try to risk it, then a 2% trade is definitely something I would be looking at, where eventually it can compound and compound and compound and compound, where you're compounding it by that much that it almost looks like you're the best trader in the world. But depends on the account, depends on the specifics right there. Where compounding profits, as in, if I am in profit in a trade and I look to compound, not necessarily, depends on the situation overall. NASDAQ, for example, here would be an example where if we are continuing higher, we are in trade, I might add onto a position right there where I see this huge sting. If I see that huge sting higher right there, after coming above those highs, we're closing above it, then the last piece right there on futures is where you can perfectly fine add another mini right there to catch that last bit of move, because you're already in profit. So it's, when it rains it pours. It's like it's need to take advantage of when you do have a good trade. Try to take the most advantage of it and put all your margin on the line, if that makes sense. No, of course, that's of course an exaggeration. All right, I am going to end it here. Thank you everyone for being here. A great live stream. I'll upload it right away. Saturday we have the next one, of course, where we go over the breakdown again and over any questions that might be there. Thank you everyone for being here, and I'll see everyone at the next one. All right, perfect. Thank you.